Good morning to those of you who have clicked on so far. I can see our participant numbers ticking up on my screen. Whilst people go through the sign-on process, I think everyone's got pretty efficient at this these days, haven't they? Then if you want to use the chat function in Zoom, or if you've come through the Hoover platform, two ways in, then to introduce yourself, then it'd be welcome. You can tell us a bit where you're at, where you're from. I usually ask people for the weather forecast. That we had a session yesterday with as part of our storage conference that been going on with my colleague Madeline. Told a joke about storage and invited everyone to put a joke about storage in the chat, but so she's kind of raised the bar a little bit for this bit, but I'm not going to be doing that, just to reassure you. Just a simple where you're from. Thanks, Dan, for doing that in Welsh as well. That's great. One of our fine community energy groups there over in Wales with some very impressive projects. Okay, we're ticking up, so we'll just give people a few more seconds to sign in. Okay, well, I think in the interest of time, and as I say, I think a few people will join as we go along, but people are pretty efficient these days in terms of signing up. Welcome, John. Good to hear you down in the Southwest Energy Hub there. What have you got? Heart of Community, Black Country. Okay, yeah, good spread of people. Yesterday, actually, was it yesterday? Day before, I did a session. We had someone in New York, someone in Seville. So yeah, so one of the things about this new world, I guess, is that we can, people can attract and join these conferences and the sessions from anywhere. Overcast and rainy in Derbyshire. I'm getting quite interested now in the weather around the world, but we need to go on. We only have 45 minutes, and we have Rhian-Mari here with us, and I want to make the most of that. So let us kick off. I'm Merlin Hyman. I'm the Chief Exec of Regen, and we have been running a series as part of our kind of focus on the transformation of the energy system to net zero. We've been running a series of we've talked about leading the energy transition with some of the kind of key players, some interesting players in this space, and just a kind of one-on-one interview kind of format to explore a little bit more about some of the key challenges and issues in achieving zero carbon. This is also actually the week we've done a big conference on electricity storage, which is one of the kind of key technologies I think we all know that we're going to need if we're going to achieve some of these targets. So this is alongside, it's not part of it. We're not going to be talking about storage particularly or at all. I might try and persuade Rhian-Mari at the end that she might want to think about it, but that's not the focus of today. But for those of you who are coming to us from our storage conference, then welcome to you as well. So we've interviewed a whole range of people. We've interviewed Nigel Topping, who's the UN high-level climate action champion. We've introduced, we've talked to Fintan, who's the chief exec of National Grid Electricity System Operator. So some lots of interesting different focuses. And today we're going to talk about finance, the money. Where's the there's a lot of change needs to happen to achieve zero carbon and the Paris goals, and we're going to have to mobilize a lot of money. The last figure I saw, it'd be interesting to see what Rhian-Mari has was $1 to $2 trillion a year, which came from the Energy Transitions Commission. 1 to 1.5% of global GDP. So I'm not quite sure if that's a lot or not a lot. I'm sort of pondering what I thought about that. But we're going to need to mobilize a lot of money and a lot of investment into this space. And that's at a macro level, and then we can think at a very kind of micro level of particular technologies, new business models, where we're going to need to find ways of, that there are barriers at the moment that we need to find ways of unlocking in investment. So I'm delighted to have with us Dr. Rhian-Mari Thomas, who is Chief Exec of the Green Finance Institute. Morning, welcome Rhian-Mari.
Good morning, and bore da to those who are dialing in from Wales. Glad to see that Awel and Mantawa have dialed in, and I'm sure a number of others from other community projects across my homeland. So greetings from a overcast but not raining North London.
North London, excellent. Okay, just how this is a kind of maybe to start off, remember, just tell us a little bit about how you kind of got into this kind of role. I know your background is very much in the city, in finance. So what took you from that into trying to kind of run an NGO, into an organisation that's trying to kind of switch the way finance looks at this agenda?
Well, I think I've been an avid environmentalist since my dad explained to me about the greenhouse effect in the 80s, where I ran a paper recycling project at my school, and also did a little campaign about cutting down on hairspray, which for those of you who used to model their hair on Dynasty and Dallas in the 80s, remember it had a lot of hairspray, and was obviously contributing to the ozone hole. So something that I was always very focused on. Then obviously I got into the world of finance and started wondering how on earth I could align those two interests. And then I guess I had a bit of a personal epiphany after the Paris Agreement was signed. Gosh, that sounds rather grand, but it did occur to me that with all these countries making their new nationally determined contributions, there was going to need to be a shift in industrial strategy. And clearly, as we keep hearing, the billions and trillions needed to affect that would be far too much for the public purse. So it became evident to me that there was going to be a huge role for private finance and huge first mover advantage for those banks and those investors that saw the opportunity and learned how to partner with their clients in order for them to pivot their businesses towards the low carbon economy of the future. So from 2016 onwards, I started pivoting my own career in this direction. So setting up a green council at Barclays, setting up the equivalent of a green corporate bank, launching 12 different products, including the first green mortgage by a main high street bank, where an energy efficient home could avail of tighter pricing, for example, as well as doing the first green bond issued by a bank backed by UK assets. Very proud of what we achieved, but then saw that this platform sitting at that sort of interface between the policymakers and the city was somewhere where I was really going to be able to use my experience, 20 years of banking, to really affect change. So we're 18 months into the Green Finance Institute. Just quickly on that, Merlin, we're an independent, commercially focused organization. We were seed funded by government and the City of London Corporation. They've given us 3 years of seed funding as a runway before we are meant to be a self-sufficient, even profit-making organization. And pleased to say that with the support of Quadrature Capital Foundation, Loudest Foundation, Climate Works in the US, we're on our way to diversifying our revenue streams and doing what it is I preach, which is leveraging government money so that we efficiently bring in other sources of capital as well. But I'm sure we're going to get onto that point at some point later.
That's a very resonant themes for me there. Regen was originally funded by the public sector and leveraged that money to create an independent self-financing organisation. We'll probably be a bit over past some of people on this call, but the 80s and the some of the environmental issues then were something I remember standing for the school election, shadow general election as the Green rep. I didn't get elected, I have to say, back in around 86 or something like that. So yeah, some shared themes there. And I think am I right in thinking then your two shareholders at the moment are City of London and government?
Yes, so for those of you interested in these things, our company structures, we're limited by a guarantee, and we have two guarantors, which is City of London Corporation, with a huge amount of support from the Lord Mayor, who is branding himself as the Green Lord Mayor, and from Her Majesty's government, so particular from BEIS and the Treasury. Okay,
also Regen limited by guarantee, similar, although our members are companies and others involved in the kind of energy transition. Okay, so how are we doing then? Remember, we've got Paris, we've got net zero coals. We know we've got to get net zero in UK. We've set legally binding target. We've had people like Mark Carney, Governor of the Bank of England, being very eloquent on the need to shift the kind of finance community. So, what's the progress, and what are the key barriers that are stopping the transition that you've started to sort of describe for us?
So obviously I'm stubbornly optimistic about this whole agenda. Otherwise, how do you get up every day and work as hard as we all need to on this agenda? But I do think there are real reasons for optimism when it comes to finance. And Merlin, you and I were talking previously about discussions that happen at a very high level versus discussions that happen at the local level. But when it comes to finance at that high level, that systemic level, we now have 83 members and 13 observers of the Network for Greening the Financial System. So that's a coalition of central banks and monetary authorities, including, as of December, the US Federal Reserve, who are all working together with the ambition of aligning the finance industry as regulators to a 1.5 degree target trajectory. So at the systemic level, and all credit to Mark Carney and the work that he did as head of the Financial Stability Board and as Bank of England governor in really spearheading this and continuing the work that he does. We also see, I think a third of global banking are now signed up to the principles of responsible banking under the UN. There's over 1,700 signatories across business and finance to the Task Force on Climate-Related Financial Disclosure. And so it could go on. In terms of finance actually moving, so I mention all those things because clearly this is a discussion that is now at the C-suite level. It is something that has been elevated, and there is real recognition, not least from Larry Fink's letter that came out this week, that we are seeing this tectonic shift in finance, and that in order for financial stability, let alone climate stability, we need large financial organizations to pivot their business models so that climate risk is recognized as financial risk. And there's been huge amounts of progress in the last 5 years. So that's the hugely optimistic message.
Okay.
Less optimistic message is about the actual finance flows. So records were broken last year where we saw over 800 or nearly $800 billion, according to Refinitiv, of sustainable finance labeled in the capital markets. So huge trajectory. And I was speaking yesterday, some of you might have caught the Committee on Climate Change Net Zero Finance report launch, authored by the fantastic Professor Nick Robbins. And I was lucky enough to be on that advisory group. Some of the stats that I shared yesterday was around the flows into environmentally social ESG, environment, social and governance aligned funds. And from 2017 to the beginning of the pandemic, there was a 37 times increase in the flows of finance in the UK into those funds. And that number has continued globally during the pandemic, where we've seen the ESG aligned funds on the whole outperform their non-ESG equivalents for a number of reasons. But so we're seeing this huge influx of finance into ESG, huge amount of awareness. And yet I'm sure we'll get in the chat a number of people saying, I've got a local project that I want to do. I'm struggling to get finance. I'm struggling to get the local authorities to be adequately capitalized to do this stuff. So the barriers of translating the rhetoric, the commitments, the goodwill, and the increased awareness at a senior level to on the ground place-based delivery. We need to move away from the why and very much into the how. But I'm pretty excited that that's the challenge that's ahead of us, and more people get it.
Okay, so one question I've kind of wondered, as we start to positively invest in sustainable solutions, nature-based solutions, renewables, etc., is there always what will finance just continue to flow into, let's call it the bads, let's call it fossil fuels, let's call it oil, coal? Do we need to focus on the kind of do we need to focus more on the opportunity agenda, or on the kind of let's stop financing the kind of the bads? I remember when BP came out with the new chief exec and talked about reducing their amount of the amount of fossil fuel they actually dug up as part of a transition. I think their share price went up for a bit and then went down a bit. So, you know, what about, you know, what's the balance between positive investment of a proportion of finance into the right things and stopping investment into the bad things, if I could put it in simplistic terms?
Yeah, and unfortunately, I think that is a bit simplistic, Merlin. I think we've seen this year that, you know, just the input, pulling the plug on investment, we've seen that what happens to economies worldwide from the tragic impact of this pandemic. So the idea of a disorderly transition where we just say we have to stop, I don't think works. We're going to need to find more nuanced, sophisticated ways of transitioning away from the petro economy to the electro economy. So I think it's a balance of making sure that we are transitioning as quickly as we can, but also the theory of change that we have at the Green Finance Institute is very much about, if you're going to ask people to stop making money from things, one way is to regulate them and tell them they can't, but the other way is to demonstrate they can make money in a different way. Demonstrate that there is a huge opportunity here. And you mentioned at the start the 1-2 trillion a year that's needed for the transition. I think Goldman Sachs came up with that number as well in their Carbonomics report recently, but they also put it in the context of that's something like 15 to 20 million new jobs in this area. And that's when you can start having the conversation with the policymakers and say, let's stop discussing this in the context of cost. Let's discuss it in the context of growth and prosperity.
Okay. So that's good tee up to what I wanted to go next in terms of the balance between public and private actually on this, and what you see as the role of public investment in this. You mentioned earlier that that's not going to be enough. We need to mobilize private capital. But what we had a green investment bank, and then we shut it down, and then we sold it off, and now we're creating a new investment bank with a green remit. I think, you know, how do you see that balance? What's the role of public finance and investment alongside the private sector?
So if you start from the premise that public finance alone is not sufficient to meet the trillions that are needed, you quickly get to the conclusion that public finance needs to be the catalyst for crowding in private finance. And you mentioned the Green Investment Bank, and we do have a fantastic blueprint, or green print if you like, of how that can be done well. Through the Green Investment Bank played such a key role in driving the offshore, you know, developing the offshore wind market, which is going to be, you know, something like 27,000 jobs by 2030, plus the rest now that the government have announced. But that was such an interesting case study in that, you know, developing a high potential yet untapped technology from a finance perspective required contracts for differences in order to provide a floor price for the, you know, the cash flows that would be generated from this new technology. It required government to think about some aligning certain regulations. I think there was some stuff about leasing of seabeds versus onshore. So that needed, you know, some really detailed regulatory technical stuff that needed to be done. There was the need for auctions to show that there was going to be a long-term commitment to this energy source. And then finally, there were still investment gaps in, you know, construction risk, project risk. And that's where the Green Investment Bank as a special purpose vehicle came in and actually met those gaps to begin with. Today, that whole industry is invested in by institutional investors, sadly, most of them not British, but that's something that we need to think about. But it's, you know, the Green Investment Bank crowded in private capital, built an entirely new industry, and demonstrates how we should be thinking about how we do that for the other technologies and industries going forward. And again, and I know you and I are a bit nervous about talking at too high a level. That's, you know, we're talking about industry-wide transformation, and that's important. But there are equal lessons to be learned around how we can use government money as guarantees to crowd in finance into social housing or into electric vehicle financing, or how we finance charging points, etc. So many examples where grants are necessary in some cases, but they're not necessary in all. And you've got this wall of private money that wants to invest in ESG, as I outlined at the start, and an opportunity for smart structuring to use government balance sheet as the catalyst that pump prime those markets.
Okay, so one more reasonably kind of high level, I guess, question. I think you're right. Let's drop down into particular sectors. But I mean, what you've described, and Rhian was intimately part of that offshore story over 15 years. Our chair was one of the leading developers of the Thames Array, which was the largest in the offshore wind farm in the world at the time. So, and we ran a lot of supply chain developments, projects, etc. back many years ago. And you're right, there's a huge number of moving pieces. But one of the things I'd observe in being very involved in policy over many years is that the investors and financiers are actually very rarely at the table as we think about those policies. And so if one of the aims is to enable finance to flow, to create environments and worlds in which banks and others can say, yeah, that's the kind of environment that I'd like to invest in. They're not really very much at the table. And I wonder whether that is not being invited, or my perception, having tried to get them involved, is that they just don't really see that they have a tendency to sit back and say, well, we'll wait for public policy, and then once it's all sorted, then we'll come in and invest. And so is there a way of getting, and maybe it's green finance, but is there a way of getting finance more at the table as we think about those detailed policy issues? Because it feels like a real gap to me.
Well, you laugh, but it is a core part of our strategy is to make sure that the city is involved, and that we make sure that financial considerations are brought into those discussions, not just from the economists, but actually from bankers, people who make money move through transactions, through deals. And you're right, I think there's been a bit of a reticence to involve financial experts, because quite often if you're not familiar with finance, it can quickly sound quite jargon-tastic and complicated and a little off-putting. And equally, people who are focused on doing transactions and deals, taking time off their desk to have high-level conversations about things which they don't immediately see as in their own self-interest, that's difficult. And so, and I don't mean that in any form of criticism, it's just if you want to talk to people who've got a profit motive, the easiest way to get them around the table is to demonstrate that this is in their own self-interest. And I think that's the message that's starting to get through. That, I think it was Bill Gates said it yesterday at the virtual Davos, that we need to spend billions in order to save the trillions. And so the financial sector increasingly waking up to that, saying that the way they're working needs to pivot. And if they're not at the table helping influence how these policies are being thought through so that they are investable and that they do create a revenue opportunity for finance, then it's going to be suboptimal.
Okay.
And so I think there are ways, but just talking practicalities, the Green Finance Task Force that was pulled together a few years ago, it was 2017, 18, and I was very fortunate to be part of that in my old role while I was still at Barclays. That was sponsored by government. It was Claire Perry-O'Neill and John Glenn from Bays and Treasury, and they asked Sir Roger Gifford, who's our current chairman, to pull together a group across the city to come up with how we could mainstream green finance. And that task force, I think, it was a really good example. It was only 6 months, but it was very practical. And the 30 recommendations, one of which was to set up the Institute, another one was to do a green gilt, one was to set up a green venture capital fund, which is now being headed up by Beverly Gower-Jones. A number of those recommendations, and make TCFD mandatory, let's tick that box too. A number of those recommendations have been taken forward, not as quickly as we'd like, obviously, but I think that was one model of trying to get finance around the table and to input, because it has a lot to offer to those conversations.
Okay, so let's take this then into a particular sector where you guys have been particularly active, which is in kind of buildings and sustainability and in the built environment. And of course, when we talk about policy, I think we could argue that this has been an area of pretty spectacular policy failure, actually, if I was to think about it seriously over the last decade or so. And it's clearly very difficult. We're talking about the individual decisions of millions of householders shifting away from technology they're comfortable with, a supply chain they're comfortable with, or sometimes within groups of social housing, new homes, but often just in sort of owner-occupied and kind of type environments. And I think it's fair to say that it's pretty hard to mobilize finance into that sector to try and bring in the kind of scale of investment that's going to be required. So do you want to say just a little bit more about the kind of approach you've been taking to address some of those barriers and where you feel you're getting to?
Sure, thanks for that. I think, well, not to over-flatter you, Merlin, but I think our approach is very similar to yours, which is one that is very much rooted in practitioners and making sure that we're as close as possible to the coalface. So, the strategy that we are adopting at the Green Finance Institute is, in order for us to help financial organization pivot their model, we really need to focus on real economy investment opportunities and create those for mainstream financial players. And so we very much look, rather than greening finance, so doing more work around risk and disclosures and a number of the levers that I think are the purview of the regulator, and we work very closely with the regulator, but we let them very much take the lead on this rather than trying to make that our core strategy. Instead, we look at financing green. And by picking areas such as retrofitting of buildings and decarbonisation of heat, which was our big initial flagship project, we pulled together not just the financiers, but also the local authorities, central government, academics. I think we've even got some estate agents as well as developers, the whole value chain brought together to go, okay, guys, what are the barriers to getting £65 billion into the retrofit supply chain so that we can meet the minimum energy standards required of 30 million homes across England and Wales by 2035? Because it's not one monolithic blob of money. It's green equity release for people who have, fortunate enough to own their own home and have paid off most of their mortgage. It's different solutions yet for grant-based and guarantee-based solutions for social housing. It's how do we get over the split incentive issue for landlords, where they have to pay the upfront capex to retrofit their building, but the tenant gets the benefit of lower utility bills. It's been solved in New York, where they have very standard clauses in their legal agreements, but over here it's not market precedent, and there are regulatory issues in the way to adopting it. So all of this super nitty gritty stuff that when you actually sit down and you speak, and it's not announceable and sexy and big conferenceable, unfortunately, but it's actually what we're going to need on this particular problem in order to get the money moving at the local level. And so some of our projects are things around, I think we're about to announce our building renovation passports work that we've been working on, I dare say, with some people who've dialed into the call today. We work with the Loan Market Association to come up with green retrofit finance principles. I think we're up to 12 big mainstream finance organizations have adopted them because there's an awful lot of greenwash in this space. And we were like, well, you've got to start there. We're working on coming up with a property assessed clean energy program. So everyone keeps telling me about how the Green Deal was a massive failure. Honestly, if I got money for every time someone has said that to me, as though that should be a deterrent to continuing to think about on-bill finance solutions, I wouldn't need to do this job. But in the States, we see property assessed clean energy programs have managed to mobilize almost $6 billion of institutional investment into commercial and domestic retrofits, which are then repaid through a property tax to the municipality. And so these things, we see them working in other jurisdictions. And part of our job is to work with a broad set of stakeholders to really look and see what needs to change in order for us to adopt some of these successful ideas and to help them scale. Okay,
that's very helpful. It might be worth us talking a little bit more about a project we've been running with one of those kind of Energy Sprong label. I don't know if you've come across that, which is kind of whole house retrofit to a scale kind of concept, which we've been running down in Devon with 20 homes. And it's interesting to see actually some of the detailed issues, you know, that this has required ground source heat pumps, and the nearest rig was in Harrogate or something like that, and this was in Devon, and so that, you know, the costs are sort of like, you know, spiral because of some very, very practical issues. It's probably, if we're worth talking about this issue, it's worth also just recognizing that a lot of, we saw it in the Guardian a couple of days ago, that the current Green Homes grant scheme has you know, been done in a rushed way, badly administered, and just recognizing the pain that a lot of our members have gone through actually in seeing it stop work, because people are waiting for something which then takes months to process, and actually very good companies in this space on the edge of bankruptcy because of a maladministration. If I'm going to use that term, probably won't ask you to, but you know, it really does, it's hard to see. So I guess that, you know, there's some, you know, really great minds coming together that you'll bring together to think about doing this stuff properly, but we I guess we still we're still trying to overcome kind of political imperatives to act quickly, how get a headline, get some money out the door quickly. You know, I'm not sure I'm asking you for an answer on that particularly, but in your more optimistic mind, do you think we might get towards a slightly more longer term and sensible approach?
Well, I hope we do, because that's what it's going to take, isn't it? And so, my huge sympathies to some of those companies that you've mentioned. From a finance perspective, the Green's Home Grant didn't quite meet what it could have done, which was act as a catalyst for, you know, the mainstream financial providers to be lending alongside the Green Homes Grant, which I think that was part of the intention. And so, you know, I'm not one for sitting around lobbing rocks and complaining. Instead, we got the main finance providers who provide green retrofit loans into a room, and we said, what could have been done better? Because you're not seeing the volumes come through to you, which you would have hoped. And so we're able to do that as a neutral party, because we're not, you know, I'm not a government department, I'm a neutral independent company. So we were able to go into government and say, look, this is what the practitioners in the city are saying about how this could have been done in a way that would have helped mobilize more of their money. But the fortunate thing is, because we have government backing, we get a lot of access. So we can put those sort of constructive criticism and constructive suggestions forward.
It's great to know that's happening, and we're trying our best also to be generally constructive, sometimes slightly frustrated. If some of the people on this call may well be involved in these kind of industries, there's quite a lot of people involved in electricity, which would perhaps you know, which isn't so much your focus at the moment. We might touch on it, but also in the built environment. So are there ways that they can get, you know, involved and start to be more part of some of these conversations, and sort of highlight some of the granular experience that the supply chain is actually kind of facing, which often doesn't, you know, isn't the kind of, they're not the kind of people that tend to end up in the conference in London, you know, and so they're often there isn't very good feedback, you know, what ways they can engage with through your kind of initiatives.
Absolutely. So we've got, so our Built Environment Coalition started with 6 people, and it's now up to 220 members working on I think we've got 10 live projects at the moment. They're working on all those work streams. I always get in trouble with my team for coming onto these events and saying to everybody, oh yes, send in your emails at either to me or to info@gfi.green, and then it's up to my poor hardworking overstretched team to try and get back to people in a timely way. But look, constructive ideas, more intel, that's how we're going to solve these problems. But my apologies in advance if you don't hear back from us very quickly, but you know, we get a lot of inbounds, and it is very much influencing how we're running the coalition. So that was our first coalition. Yep. It's still going strong. We're also we just started looking at transport. I'm delighted to have hired the former head of electrification of transport from Lloyds Bank. Lloyds Bank's still talking to me, even though I've poached their star. And so Lauren Pammer is going to, you know, she's setting up that coalition, which will look a lot like the housing one, but we're doing it in transport. And then the other area that we're getting involved in, which you touched on, Merlin, at the start, was in nature-based solutions. And that's obviously a very different challenge from a finance perspective, because the connection between ecosystem services and nature, and how that poses financial risk to the financial system, that that whole conversation is at a much earlier stage. But of next week, hopefully, one of the things that's going to really kickstart that conversation is the publication of the Dasgupta report by Professor Dasgupta. We're very close to that work. My chair, Sir Roger Gifford, ran the finance work stream for that. And we'll be leading on behalf of Treasury the private finance sector response to that report. So that's.
So what does that? Because I imagine a number of people on the call today are probably involved in renewable energy, in the built environment, maybe in electric vehicles and energy.
Yeah.
And are kind of probably aware that land use is a huge issue, and maybe have touched on that a bit, but and perhaps thought about offsetting emissions with tree planting or things like this. But I just what might be an example of where you might be able to deploy finance into this kind of nature-based solution approach?
I think it's all of those, and I think it's all there's things that you've mentioned. Tree planting is obviously a big one, but it's things like, and I've given this example quite a few times, of one of the water utilities, for example, that diverted some of their capital expenditure away from chemical processing and towards a wetlands project that they got one of the NGOs, in this case it was Rivers Trust, to develop for them. And by literally upstream having a healthy wetlands, the quality of the water was improved. So they actually made an OPEX saving, on an operating expenditure saving, on the chemicals that they needed to process the water. That to me is a fantastic example of how we can find ways of deploying capital through industrial counterparties towards environmental outcomes. But just in that sentence alone, you see all the different types of parties who are all going to have to work together to figure that out. Yeah. A lot of the intellectual capital sitting in the environmental NGO space and the academic space, not used to talking to big finance not used to having to think in this way. And so there's so much work to be done. But increasingly, there's recognition that we're not going to solve the climate challenge through technology alone. Nature is going to be an intrinsic part of how we do this.
Okay. Just on the kind of electricity generation kind of area, and I know that's an area you've deliberately chosen not to focus on, perhaps because of the other areas I think you've articulated are perhaps more challenging, more difficult. But just in kind of principles, a lot of the people on this call have been saying, we've got some very good smaller projects out there that might be community scale, might be a few megawatts, might be, and they're incredibly difficult to finance because, well, very well that large projects, the costs for the finance are probably much the same for a very big project, a little project, but the returns much higher. So there's a challenge of sort of bringing them together, of aggregating, and that starts to get pretty complicated. And actually, as we look forward with the government's contracts for difference scheme, is really the only almost the only viable route to market for a lot of schemes, and that's really focused on very big renewable generation. But if we're going to have 4 times as much renewables as I think the white paper sets out, and 10 times as much storage, we're going to need some decentralized stuff as well. I mean, any thoughts on we might start a better dialogue in that space to start to think about new routes to market for smaller projects?
Well, none of the answers to this are very easy, and I'm not going to come on here and pretend that I know all the answers either. We're very much learning by doing and learning by collaborating, and that the challenge that you've raised is a really live one. There's one particular project, one of our coalition members is Abundance Investments, who I'm sure many of you know.
Yeah, we've had Sarah on various talks, and known her for a long time.
And so they're successful community municipal investment projects that they've done in 2 local authorities now. We're working with the team to figure out how can we scale that. And there are some, unsurprisingly, some regulatory barriers in the financial space, which is making it harder for the team to roll that out at scale. So we are working with them. That's clearly not the only solution, but they have has been demonstrated to be a successful solution, at least in, I think, West Berkshire, and it escapes me the name of the second county.
Well, that might be something worth us talking a bit more about. Rhian actually 10 years ago helped to create something called Communities for Renewables, which has raised finance and deployed. Jake will will tell me off if I get it wrong, but certainly over 30 megawatts of projects, and certainly raised tens of millions of pounds into community scale projects. And so we've been, and others have been doing some great stuff in that space as well. But so yeah, some really good experience and ideas. But as you say, it hasn't, it's scaled to a certain amount, but it hasn't really scaled, I guess, as a model, which I think is actually more common on the continent, where a lot of renewable energy projects are owned by local communities, or in one way, shape or another.
So you mentioned earlier the National Infrastructure Bank, and we're fortunate enough to be in discussions with the Treasury officials who are working hard to get that stood up as quickly as possible, at least in a sort of interim form before that legislation is passed to set it up properly. And I do think this challenge of how do you aggregate local projects, or how do we find a solution to the fact that large-scale financial institutions will always try and minimize transaction costs by deploying large amounts of money. And by large, they mean like 500 million, £1 billion at a go, when actually it costs £18,000 to put a heat pump into a house, right? So it's that, how do we, and I don't know the scale of some of the projects that some people on the webinar today have in mind, but they're presumably not £500 million finance requirements. And so there is a real challenge of bridging that gap, but it shouldn't be beyond our wit of figuring out how we do that and what the structures are and what maybe public finance architecture we need to put in place to do that successfully.
Okay.
And that's something that we would welcome thoughts and constructive thoughts, please, because it can get a bit depressing when you get lots of emails of people telling you why things aren't working, when there's an opportunity for us and Regen and others to put proposals forward to say, do you know what, if we could just change this, it could unlock capital flows, in the hope someone will listen.
Okay, just conscious we're coming towards the end, but just one sort of final thought on that is in the electricity space, and particularly in the storage space, we're kind of moving from a model of long-term guaranteed public underwritten things which can attract infrastructure finance to more of a kind of merchant type model where people are there's live markets and people are kind of trying to make sort of look ahead, but there's no guaranteed income streams, but they're having to sort of make a finance decision based on, if we took storage as a topic for this week, there's going to need for more flexibility in storage on the system. Therefore, there will be some value to it, and therefore, I'm going to make an investment based on that kind of model. But that's been quite a hard transition, I think, that we've been trying to go through. Is that something that's just about better education for the finance sector, or?
I think in all of these topics, not just about the energy transition, but about the transition we need to see in transport and shipping, in aviation, in harder to abate sectors, and pretty much the whole thing, education is a huge, huge challenge. And I think we've done a fantastic job of raising awareness. Now we need to do a job of enhancing expertise and skills, and being able for the finance industry to partner and be really constructive partners in answering the sort of questions that you're raising. We deliberately didn't focus on energy transition as our first project, because I took the view that there were already so many successful organizations that had really started making great inroads into that space, and maybe some of these other areas the finance community hadn't been as proactive, but hopefully the constraint on all the work that we'd like to do is always resource, and it's always financing. But the ambitions that we currently have today are just where we're starting. We're only 18 months old, and we would love to get involved in some of these other topics. It's just, my team works hard enough already, as they'll let me know.
I think mine might echo that view. Rhian-Mari, we've come to the end of our time, so it's been fascinating to start to explore some of these issues and the critical role of finance, and how we can link much better up practitioners and people on the ground and supply chains up with the finance community and the policy community at a much early stage, and kind of, this is too big a transition, isn't it, to be done in bits. We have to mobilize the whole of society, and we have to, at all levels, if we're going to make this kind of transition. So, exploring the role of finance and how we work better to to enable that finance flow is critically important and really fascinating to talk to you about. So as I said, we've unfortunately reached the end of our time, so only really arranged just to thank you very much for your time and to say we enjoy it and looking forward to engaging with you further on some of these issues. And I saw some of the, I'm sure you'll hear from some of the people on the call as you kindly invited. So thank you very much. Thank you all to everyone who's participated. We had over 150 people here on Zoom, and I think more on the Hoover platform. So lots of interest. And to wish the rest of you, wish everyone a it's not a safe journey home anymore, is it? It's a safe journey to your kitchen to make a nice cup of tea. And thanks again, Rhian-Mari.
Thank you very much. And thank you, Merlin, for the work that Regen is doing. We're finding it hugely helpful to be working with you. And I know there've been lots of questions in the chat box. I've seen them coming in. I'm not sure we've touched on many of them, but hopefully Merlin and I have a chance to look at them after the call. So thanks very much for dialing in this morning.
Thank you all. Goodbye.